let's go across to Manisha Gupta. She's going to talk about the commodity markets now. Manisha, what are you looking at?
Well, there are just two things to watch out for, Sonia. One is monsoon and another is crude oil prices. So crude is what I'm looking at right now. We're trading at around 3-week highs and very close to 9-month highs as well in the international markets there. $87 and above is what we are trading at. And if it goes to 88, then we are at a 9-month highs in case of the Brent crude prices there. It's a 6th straight day of trade and we are headed for a weekly gain as well. But prices are up 5% in this week. And for the month of August, it's the last day of the month. We are up by nearly 6% right now. Of course, we have a couple of time zones to go. And more importantly, you have the US non-farm payroll data coming in today. And the markets will take cues from that as well. As of now, the latest reason for support really is the kind of rhetoric that we've seen from the OPEC and allies. Saudi Arabia, for one, says that they would roll out the 1 million barrel per day cut for a 3rd straight month in the month of October as well. Russia has been saying a similar thing as well. They have not given a quantum of what their cuts are going to be, but this is what has been supportive. It clearly has been about OPEC and allies, the kind of gains that you have seen for the month of August. The output cuts, the kind of rhetoric that they have been putting out in sense of supply and demand has been supportive. Also supportive has been the US crude stocks, which we have seen decline by 10.6 million barrels versus an estimate of 3.3 million. The markets also are looking at the US dollar index, which is down by 0.5% in this week. It also is about the weak US economic data and the expectation that the US may not hike interest rates going forward for the month of September. China, the numbers that have come in today, the Caixin PMI numbers are at 51, which is much better. And with this, you've seen rise in output costs, input, new employment numbers coming in and factory activity as well. So that has been supportive. There have been concerns clearly from Chinese demand. So with those numbers coming in and with the kind of China stimulus measures that we have seen, China Bank also suggested that they would be unblocking a lot of restrictions when it comes to private companies, and that could take the prices higher. As I said, it's all going to be about the US non-farm payroll data today. And before we start with the weekend, it could be quite choppy when we see those numbers.
Okay, thanks a lot, Manisha, for that. Well, let's